G'day everyone, welcome to this weekend update for the 13th of October. Last week was a really pivotal week, I believe, in a lot of ways. At the start of the week we saw considerable market weak, or not considerable market weakness, we saw some weakness in the US market. It went down around about 4%, but then as soon as the debt ceiling deadline was put back about 6 weeks, then the market immediately turned around on Thursday and Friday, turned around so strongly that it actually ended up on the week. So that was a very powerful signal about where the underlying momentum is in the market, and it looks as though we're probably going to have some pretty good trading conditions for a little while yet. So let's get on and have a look at a weekly summary. The S&P index ended up rising by 13 points on the week, which was really quite amazing after the way things looked on Wednesday. So the markets are signaling clearly the underlying momentum is to the upside. The US market only pulled back 4%, which is really nothing considering what was at stake. I don't think the stakes get much bigger than what we had last week, and yet it was only 4% before it turned around and shot back up again. I think in the near term, the most likely outcome is a trading range. I think if that is your base assumption, then that's probably a pretty good starting point, and we'll have a look at the boundaries of that trading range shortly. But below 1656 would be a strong indication that we're perhaps going into a medium-term decline. I think that's extremely unlikely. Or above 1730 would demonstrate just how strong the momentum is in America. So let's just take a quick look at that chart of the S&P. So here was the action last week. You can see Monday and Tuesday down sharply. Wednesday an indecision day. Basically the market opened and closed at the same level, traded either side of that level. And then Thursday, massive rise, and then really good follow through on Friday. I was thinking that we might actually get a little bit of a pullback on Friday, that Thursday was just a little bit overdone, but the fact that it followed through again, closed on its highs, right on the maximum of the session, tells you a lot about the momentum in that market. So you can see we're forming up a bit of a wedge pattern here. If the market were to go below Wednesday's low, then I think that would indicate that we're perhaps heading down below 1600. Alternatively, if it closes above this 1730 level, then it really does demonstrate enormous momentum to the upside. But I think the most likely outcome is we'll just trade in this range, probably within this narrowing wedge pattern, until we get resolution of this debt ceiling debate. And I think it just defies logic that Obama is going to ring up Treasury and tell them to default, because it obviously would then put at risk their reserve currency of the world. So I think it's the chances of that happening are just so slim. It's not funny. So that's where we are with America. I think the sentiment will now swing back and be pretty positive. And that means, trading with a little bit of caution is probably okay. Let's have a look then at the ASX 200 index. It ended up rising by 23 points on the week, and we can expect, I think, to see further gains on Monday, pretty much across the board. We saw some nice rebounds. They were largely in the bigger stocks. I think that'll start to flow down the line a little bit in the early part of next week. Actually, I also want to have a look at the Russell 2000 index. So this was the Russell, so the same kind of pattern as with the S&P, but even closer to its all-time highs. So a really strong bounce back on Thursday and Friday in the small and mid-cap indices as well, which again, another huge indication of strength. Let's have a look now at the this is a 30-year Treasury bond. Hasn't really done very much in the last month or two. It's really just tracking sideways. And the other chart I want to have a look at is the VIX index, the VXO. And you can see we had spiked up to just above 20 over the last week when things got a little bit nervous, but as soon as that announcement came on Thursday morning, then you can see that the markets turned right around, or the VIX turned right around and back down under 15 again, very, very smartly. So it's all indicating that there's really not too much concern in the American market at the moment. Now, just looking at our index, just for the heck of it, this was the move on Friday, very positive move on Friday, largely in the top 10 stocks. I would expect to see that follow through by another 40 or 50 points on Monday, and that'll take some of the other parts of the market with it. Looking at gold, another nasty week for gold, down $38. It's pretty apparent that the investment banks that are basically controlling the futures market are just continuing to sell down gold in the futures market by just creating more and more paper contracts. It's the same as what the Federal Reserve are doing with money printing. They can just create as much as they like. There's no limit to it, and so the size of the futures market is way beyond the physical. But please understand that the physical market remains heavily in buying mode. There is strong demand for gold. Every time the price dips, the level of gold being physically purchased goes up. So this fall in the gold price in the futures gold market is not an indication of weak demand for gold. That remains unchanged. In fact, if anything, it's accelerating. The amount of gold that China is importing is accelerating rapidly from 1 year to the next. It's not just small increases, they are big increases. So the physical demand for gold is continuing to move higher. It's just the futures market, and it's obviously being heavily manipulated. There's not much we can do about that, but eventually the demand in the physical market will take over. So we're still in a short-term declining channel. We'll have a look at it in just a minute, and it needs to break above 1340 to break itself out of that channel. Copper, just moving to other commodities, which given that the US dollar didn't move very much, were a little bit on the weak side, which was surprising. The reason that I focus on copper is that it really is a good indicator of the health of the global economy. It's still pretty good level at $3.26, and that's profitable for most of the major copper producers, but a little surprising that it's down where it is. Oil also slightly down to $102, just off a couple of dollars, and there's the spot copper chart that you can see is really just in a tight range between 320 and 330. Let's just have a look at the gold chart now. So you can see here that we've got this declining channel. We're still above the lows that were formed in June of this year. But while that declining channel continues, then gold stocks are going to remain under a little bit of pressure. But gold stocks should start to move up prior to the actual gold price. So I'm looking for some strength in those gold stocks. So let's have a look at the GDX index. It's also in a declining channel. So no real signs yet of the turnaround. Getting pretty oversold. So hopefully we'll see a turnaround in gold stocks in the next week or two. Now finally, just looking at things from an overall strategy point of view, given that we've now got some pretty clear sailing now for the next month or so at least, I would imagine. I can't see any reason why they're going to reach an early decision on this debt ceiling deadline. I think they'll take it down to the wire again, just as part of their political grandstanding. So I would expect there won't be a lot of change in the next 4 to 6 weeks. So I think it's okay to ramp up exposure, but I don't believe it's a time to go all in the market. Use all your cash. keep some up your sleeve and be very judicious about what you buy and what price you pay. And just a repeat of what I said last week, this is for non-members. There are patterns that we've identified that are proving to be extremely high probability. They're from a combination of fundamental and technical criteria that I use, and it's pretty close to 100% success rate this calendar year. Now that's looking on the medium term. That's not really identifying short-term trading, but on the medium term, it's proving to be an extremely robust pattern. So if anyone would like more information about that for non-members, that's my contact details. Please feel free to get in touch with me. And of course, for any members, if there's any further information that you would like over and above the source of information that you currently get on a daily basis, then of course get in touch with me as well. So that's it for this weekend. Cheers.